In line with consensus, we saw the interest rates being left unchanged yesterday at 7%. Any market reaction to that? Because after all the pre-rates decisions we've had, one would assume that hardly any reaction came to the fore.
Well, as usual, banks are quite slow to react to that, and they did not react last time, so I do not expect any reaction to that. However, I think with the economy looking up, we would expect that banks will show up their lending at the moment because there'll be more demand for loans, and this will probably be good for the economy because it will increase investment.
At the same time, while yesterday's performance was pretty flat, all recent rises we've seen has raised hopes of a market recovery after 2 years of having a depressed stock market in Kenya. What's your view on the market and the activity we're seeing right now?
Well, the local investors are beginning to show some interest, but we are still seeing the foreign investors running the market. They've gone back to the 70–80% every day in terms of turnover, being foreigners buying into the market, which is good because it is an increase in demand. But most of the supply is being brought in by the local investors, some of whom are still exiting the market. But I think there is some confidence now. Sentiment is looking up, and especially now that we have seen a shift from Safaricom into the banking sector, especially equity and KCB, we expect that there is going to be more activity, since of course that will increase on what Safaricom has been doing recently.
Just looking at that trend that's emerged, where we've got foreign investors on the buy side and local investors sitting on the sell side, is that a concern for you at this stage of the game, that there's such a divergence amongst the local and foreign investors?
Well, there is a concern to the extent that local investors tend to sell out after when they're supposed to be buying in, according to most analysts. I believe that, for example, we've been telling them since October last year that it was the time to buy, but now that they've seen the prices looking up, they've started, a lot of them are exiting, and I think what happens in the end is they tend to come into the market when the shares have already become overpriced, and then they end up burning their fingers once again. So I think we need a lot of investor education. We've got too many individual retail investors with CDSC accounts. I think more fund managers, as in unit trusts, would be helpful to the market as a whole.
Of course, Safaricom psychologically is important for investors in Kenya, and it's been showing good fortune over the recent weeks. We saw it rise above the 5 shilling mark at one point, and with that we've got investors positioning themselves to take advantage of the upside. That on the foreign side of things, locals, as you say, still need some education. What's catching your attention at the moment as a local investor?
Well, I've noticed that KCB is getting a lot of local attention. I think locals have confidence in that. But there's also a lot of sellout in equity, and the foreign investors are getting into equity heavily. When it comes to Safaricom, we're still seeing a lot of exit. Local confidence has not yet come back. They still feel that they burnt their fingers, but I think it is because most of them got in with the wrong notion that it would be another Kenyan and they would make quick profits. So the fact that that did not come out as they expected has actually affected their confidence in Safaricom. But foreigners seem to be seeing something different, and they are getting in heavily, especially now that the M-Pesa and Safaricom's innovation has been showing very good results.